All right, everybody. CryptoVin here, CryptoVin YouTube channel. Thanks for watching. Much appreciated. Wanted to do try to do this quickly, a video on how to exit the banking system if you wanted to, or how to exit the banking system as much as possible so you don't get caught up in a bank that doesn't have your money in it anymore. Maybe keep your money somewhere else or a lot of your money somewhere else so you don't fall victim to a bank run or a bank that collapses. So, with that being said, let's find out why SVB collapsed in the first place or why banks collapse in the first place. Let's look at a great video by a guy I watch. His name is George Gammon. And I'm going to play a little bit of the video, not the whole thing. I'll leave a link in the description so you can watch it when you get a chance. But let's listen to what he has to say.
So let's go ahead and look at the balance sheet of SVB. They've got $1 million in assets that consists of treasuries and mortgage-backed securities, and this $1 million deposit from Pat. Okay, well, let's just assume for a moment that interest rates, as illustrated by this red line, go up. All right, well, that means that the cash position of the bank goes down. Why? Because there's an inverse relationship between interest rates and the price that you can sell a specific bond at. So if treasuries were purchased at a 1% interest rate, if interest rates go up to 5%, the price of those treasuries goes down. So let's just assume for a moment that Pat's pot app isn't doing so well. Who would have thought it isn't making any money? So Pat has to draw down this $1 million. He has to spend it, of course, on payroll and rent and all these real world things. So in banking.
All right, guys. So you get the picture of what happened with Silicon Valley Bank. And I just want to show you guys. So there were a lot of businesses in Silicon Valley Bank. There were some personal accounts, but mostly businesses. And the FDIC insurance doesn't cover businesses, so they're not insured. Personal accounts are insured. But like I said, businesses came to withdraw their money out of SVB for whatever reason, and it wasn't there because their SVB's investments went down. So the word got out, and there was a kind of a bank run, I guess, on SVB, and it's what caused the collapse. And for whatever reason, the Fed decided to come in and bail out the businesses. So whether that you think that's a good idea or a bad idea, that's topic of another video. I just want to go over like basically why it happened, because this would lead to the next question. Well, I don't want to keep my money or all my money or most of my money in the banks anymore. So what do I do? Well, one of the options is crypto, right? So you have to get a non-custodial wallet, such as Clever Wallet. But let me backtrack for a second. So the FDIC insurance only covers, it covers personal accounts and savings accounts in the banks. But get this, I'm on FDIC's website. I'll leave a link in the description. So basically, the Federal Deposit Insurance Fund only has $128.2 billion in it. So there's probably, there's over 300 million people in the United States. A good portion of them have savings accounts, right? Do you think $128 billion is going to cover everybody's savings accounts? No, it's not. So you have a bank collapse, you can have a bank run, and $128 billion is going to go very fast. So what do? You keep a lot of your money out of the bank. So like I said, how you do that, non-custodial crypto wallet if you're interested in crypto, like the Clever Wallet. So why the Clever Wallet? It's non-custodial. Only you have access to your account data. Your keys, your cryptos, no KYC required. You can buy crypto right in the wallet. You can connect to dApps right through the wallet. There's great support. Clever has great support. live support, and they have swaps. So if you buy Bitcoin, send it to your Clever wallet. You could swap it for Ethereum or whatever you want to swap it for. So like I said, Clever is very secure. Your keys, your crypto, non-custodial. You don't have to use Clever. You can find another non-custodial. Well, this is what I use. I use Clever. So, do your due diligence. I'm not a financial advisor. This isn't financial advice. But if you buy your crypto on an exchange such as Binance or Coinbase, you want to immediately send it out to your non-custodial wallet, such as crypto. Why? Because on Coinbase and Binance, you're not in control of your crypto. They can shut down, they can go out of business, they can stop you from transferring your crypto out of the exchange. With your wallet, nobody can stop you. You can send it anywhere you want, and you hold it, and it'll always be there. So, with that being said, if you like this kind of video, guys, be much appreciated if you could subscribe. I'm trying to get to 1,000 subscribers. I don't have any fancy cameras or editing equipment. Just something to think about. Also, if you want to support the channel, you can buy me a cup of coffee. No account needed. It's in the description of the video. My link, it's safe and secure. Yeah, so that'd be great. I'd much appreciate it. So let me know what you think of the video, guys. Thanks for watching again, and we'll see you on the next one.